I wanted to welcome everybody here again to this discussion of patent infringement insurance, because all of the patent licensing stuff is all fine and good. But as a friend of mine in the insurance business did tell me, he says insurance is kind of the wrapper that makes everybody finally feel secure. It's the bow on the package, if you will. The patent book is a new market center for licensing patents and allows subscribers to the patent book to purchase freedom to operate and amnesty for past damages and lots of other very, very good things to allow the marketplace to function more efficiently, because the patent owners receive fair compensation with a uniform set of criteria. The best way to tell the story is with a picture, and this is what how we envision it occurring. Folks put all their patents together, you pay one price, license all the patents, and we distribute the income according to the quality of the patents. This has been done before, of course, with sewing machines. It's done in electrical utilities and in music in different ways. This is more similar to ASCAP and BMI than Spotify or Apple Music, but those are metrics that people do understand there right now. So I'm going to hand this then over to my colleagues at Aon, who are more than qualified to address insurance because they're the folks that are writing it. So, do you see the screen here?
Oh, yes. Yeah, good.
Okay, and it's sizable enough so you can actually see it?
Yes. Yeah.
Looks great.
Yeah,
All
that's
right, Brian, I'll hand it off to you. And you can just go ahead and
okay.
tell me when to move to the next slide.
Yeah, sure. So very nice to meet everyone. In case I haven't met you, Brian Hinman. I help to lead the practice of IP solutions within Aon. I've been with Aon since the inception of our practice back in May of 18, where we started with a handful of folks, and now we're up to about 150. But we've, prior to coming to Aon, I headed all of intellectual property. I was chief intellectual property officer for Philips worldwide, sitting in the Netherlands. Before that, I ran all of IBM's worldwide practice on IP, as well as Verizon and InterDigital. I was the founding CEO of a company you may have heard of, Allied Security Trust, and co-founded another one you might have heard of, Unified Patents. So, been around the world on with respect to looking at monetizing IP, as well as growing portfolios and doing strategy, and then on the defensive side, really developing unique defensive structures to try and figure out how to combat third-party infringement. And that's what we're going to talk about today, and that's what Ross, who's one of our stellar IP brokers, is going to lead us through an insurance discussion. So the next slide, I'll just briefly touch on our organizational capabilities. We've got a really strong mix of different capabilities. We've got corporate IP leadership folks, the former head of IP at Microsoft. There's myself. We've also got our head of Asia, used to be the general counsel of Geely that owns Volvo, and chief trademark counsel Wrigley. So we've got a lot of different capabilities from former corporate IP leaders. We've got former patent attorneys, so RP legal and advisory practice, the former CEO of a patent firm, Lee and Hayes, and a bunch of others. And we've also got the largest IP broking team in the world, and and Ross is very much one of the leaders in that group. We've got technology development. We've got at least 40, 50 people that are focused on developing our platform and products around it, called IP Genome, that you see in the middle. And that platform is really what drives our solution set. So we're able to take, and at scale and at speed, we're able to analyze very quickly large portfolios of patents from anywhere around the world, and look at using AI, machine learning, and other types of natural language processing to be able to analyze and effectively attribute quality assessments and valuation assessments, which feed into our product set, which is on the insurance side. It helps to point out risk, also helps to point out value. Our valuation is very strong, and it feeds into our capital markets. Over on the right, you see we have a very good capital markets advisory practice, and what we do there is we're providing collateral-based lending to provide debt funding to companies that are looking for to secure debt capital for their next round of funding, using IP as the collateral for that. And we're able to provide access to capital with our own fund as well as sitting alongside other lenders. And then we work with folks like Ross on the insurance side to really wrap insurance around that structure. So it's a very, very unique structure that's very profitable for us. And also we've got a tremendous amount of growth because there's so much strong IP and small companies that are looking for that capital. So I'm gonna turn it to Ross to start discussing on the insurance side, and he'll give you a little bit of background. Ross, I'll hand it over to you. Next slide, please.
Sure. Thanks, Brian. Great introduction on the team. And yeah, thanks everyone for joining and having us speak about intellectual property infringement insurance today. So my name is Ross Strahl. As Brian said, I'm an assistant VP within our IP solutions group here at Aon. Sit in Los Angeles. My day-to-day job really is just working on these IP infringement transactions. I work with technology startups, manufacturing startups, all the way up to Fortune 10 type companies, and been with our group about coming up 4 years here. So started with the inception of our group within Aon. For the agenda today, really focus on IP infringement insurance, but just kind of lay the groundwork. We have a couple of interesting slides as well surrounding patent litigation statistics and some different scenarios. Just looking at past couple of years, looking at patent litigations, looking at trends around IPOs, and then looking at kind of economic uncertainties. And then we'll dive specifically into the transformation of the IP insurance infringement market, and then kind of look at what the product actually covers. And feel free to butt in and ask any questions as well as we're kind of as we're walking through this. So as I said, these are some interesting statistics that we have. So this slide just really looks at patent litigations over the past 5 to 6 years. As you can see, I think if you average this for the past 5 years, it would come out to about 4,000 new patent litigations a year in the US, right? So nothing new of crazy news to anyone on the call, but just lays a good groundwork to say, listen, this is a risk that's been there. We all know that. And here's some statistics to put that to that, right? And this is just in the US, and this is just patents. This is not even including copyright litigations, mark litigations, data right type of issues, trade secret misappropriations as well, which are on the rise. So I think it just gives a good glimpse of the actual litigations that are happening and something that can be insured as well. We can go over to the next slide, please, Art.
Sure.
Great, thank you. Yeah, so this is a really interesting slide as well. So as Brian mentioned, we had a data and analytics team, and they put some interesting graphics and slides together using some people that are smarter than myself. But this one's pretty interesting, right? So it essentially looks at the S&P 500 and GDP. It ties it to patent litigations, and essentially what they found is looking at the past pandemic and looking at the recession as well, was there's essentially an inverse correlation with patent litigations and the S&P 500 and how our market's doing, right? So it's pretty interesting, right? When you look at 2008, you see the market start to crash down there and patent litigation start to rise drastically after there, right? And then if you look at the bottom chart, when you look at 2020 after the pandemic started happening, you see a sharp increase in patent litigations as the economy starts to dip. We're starting to see this trend right now too, right? I think it's a looming potential downturn in the economy, and we're starting to see an uptick in litigations right now as well. So some pretty interesting statistics around that. And then next slide is the last one on some interesting statistics. So this one's around IPO, right? I think this is probably not new to anyone, but we actually put some statistics behind it. So this is looking at the past 10 years of IPOs and looking at what happens with patent litigations around companies looking at going public. And the year before and the year after is the highest chance of being sued for litigation for intellectual property, specifically patent. And the year after is actually the highest increase in patent litigation around IPOs. Is a 30% spike in that. And I think it's something that we see, and it's something that's happened to some of our clients as well that I go through IPOs. We see demand letters immediately from patent trolls and some operating companies and things like that, right? I think that the reason being is these companies are marketing their IPO, and everyone knows it, and all of a sudden they have a lot of big cash influx, right? So it's an easy company to monetize their IP, and it's some statistics we have around that. So pretty interesting information around IPOs.
Yep. In fact, I introduced Rich Carlgard, who is the editor of Forbes magazine, at a licensing executive society meeting. And at the same time, there was another, I don't recall the name of the company that was going public at the time, but it just went public. And he said, you watch how long it's going to take. In fact, it was 15 minutes before that company received its first notification of a patent infringement lawsuit. And that's kind of sad, when you see that. But in fact, that is indeed what happened.
Mm-hmm. Yeah, absolutely. Thank you, Art, putting some color on that.
Yeah.
Yeah, exactly. And diving into the product specifically, it's been an interesting market to say the least. I think, right, you look at the early 2000s, there were some insurers, including patent infringement and copyright infringement, kind of on a blanket basis on the back of cyber and tech E&O policies, and didn't really understand it. They were just including this on these policies. They had some full limit losses in the tens of millions of dollars on these policies, and they fled the marketplace. They got a little scared, didn't understand how to analyze the risk, how to analyze the frequency and severity of litigations, and didn't really understand how the litigations worked. And it was hard to get insurance for this type of market, right? So I think over the past, I would say 6 to 7 years, there's a couple markets in the IP infringement marketplace, but very limited. It was, a lot of times just focused on patent and patent trolls. The coverage was narrow. It would just cover if a company actually went to litigation. It wouldn't cover any settlements before or any demand letters or anything like that. So the coverage itself was very narrow. The capacity was very small as well. It was hard to get more than $5 to $10 million for insurance for a company. And as you all very well know, these litigations can go in the tens of millions to hundred millions of dollars, right? So it's a major problem. These companies are
even billions, in the German stuff.
Exactly. So hard to get a meaningful, sizable policy. The deductibles and retentions were really high too. These insurers didn't understand it, so they would just, attach millions of dollars to the deductibles just to hedge their own risk. And then the pricing was super high. It would be 5 to 10% of the entire limit, and very expensive. It would take 3 to 4 months to get a quote. So I say that all to say, it was hard to get this 2 or 3 years ago. So there's a lot more data and analytics and claims and loss information today, where the insurers can actually measure the frequency and severity of the losses, which allows them to really understand the losses more and provide more meaningful coverage, right? So I think coverage has broadened drastically. I'll touch on the next slide, but just is not just focused on patent trolls, but any type of company that sues would be covered. It wouldn't just cover patent litigations either. It covers copyright, trademark, and trade secret type of issues as well. So just trying to make the coverage a little bit more meaningful and a little bit broader for our clients. The capacity has also increased drastically. I think this is one of the probably biggest improvements in the marketplace. As I said, it would be hard to get more than $5 to $10 million in insurance. We have some insurance markets on a single basis that can write up to $100 million for clients. And so what we can do is we can go to multiple markets too to build, a single layer for one company of $200 million plus of a single limit for a company, kind of covering that catastrophic type of risk for these, large technology companies that are interested. I think the retentions and deductibles are more right sized to look at the risks and the losses of the companies, and price has gone down drastically as well. I think on average we're looking at 1 to 3% rate online for companies, which essentially just means the percent of the limit. So if you're looking at a $1 million limit for a company, 1% is $10,000 to $30,000. So pricing's gone down drastically as well.
Cool.
And then just to touch on what the coverage is as well, I think, from our perspective, it's really a defensive solution, right? It's going to cover your products and your services in the marketplace from the risk of third party asserting their IP rights against you, right? So not many companies schedule specific products and services. Typically, it's a blanket basis covering, any litigations towards a company, right? So if it's some functionality to a website or some niche product that you have in the marketplace, the coverage would be intended to cover that. It covers any threats or charges of infringement, which is important because any threats could mean, you get a demand letter from a patent troll today, you would turn that in for a claim, could be accepted, and you could have a settlement paid out in a month, right? You didn't even have to go to litigation or court to have that policy pay out. So the actual trigger for the policy is very broad and meaningful for clients from our perspective. So covers any settlements and damages as well as legal fees, which, as you all know, legal fees can rack up the bill pretty quickly, right? So there's a choice of counsel on there as well. So you see some other policies in the insurance market where there's a panel counsel. Typically there's a choice of counsel on there, which is great because most of our clients have had past IP losses and they use their specific counsel and they want to continue to work with them. So it's pretty important. As I said, the intention is to cover any intellectual property litigation, right? So it covers patent, copyright, trademark, trade secret misappropriation as well. Doesn't just cover patent trolls, it does cover patent trolls and any operating company. Could be a competitor, could be a random third-party company that doesn't even operate in your industry and they have IP and sue you. The intention really is to cover any IP litigation, towards your company. And then there's some interesting bells and whistles we can throw on there, such as business interruption, around injunctions and things like that. Trying to think if there's anything else that was relevant on the slide. I think that was kind of a good quick overview of what we're seeing from coverage. There is one more piece of the coverage I wanted to hit on, which is the contractual indemnity coverage. And I think this is one of the main reasons we're seeing a pickup of coverage, especially from service providers, software companies, and technology and manufacturing companies, right? Let's just say, for example, a software company, you're going to license your technology to third parties. Typically, you'll have an indemnification with those third-party customers. It says, hey, if you get roped into litigation from my product, I'll indemnify you for any, IP issues. Sometimes there's caps on those indemnities. Sometimes there's unlimited caps, which can increase the risk, right? So if 10 of your customers get sued and you have to indemnify all of them, that can be an expensive case for you. And so the policy is intended to sit behind all of your contractual indemnities with your third parties as well. So I think one of the main reasons why companies are picking up this type of policy today.
Well, the one thing that also is very exciting about Aon working with PatentBooks is PatentBooks intends to reduce the risk by providing legitimate licenses to vast quantities of patents. I mean, literally tens of thousands of patents, if not hundreds of thousands of patents. And with the license to that many patents and their associated comparables, when a patent troll or some other patent owning company comes and says, you're using my patent, we're able to very quickly assess the quality of that patent, see where it would be in either tier 1, tier 2, or tier 3 of a patent book, and say the rest of the patents in this particular technology vertical are earning X number of dollars. And so that does help to significantly mitigate damages right off the bat. And that's data that PatentBooks and Aon will be sharing with each other. Of course, PatentBooks data will be open to the public too. Tier 1 patents are earning X today. Tier 2 patents are earning Y today. Tier 3 patents are earning Z today. That kind of information. So what we're trying to do is bring some civility and openness into this marketplace to thus minimize patent infringement litigation.
So question, if I could ask,
yes,
you talk about those solutions within the automotive industry and the technology industry. There's a lot of litigation that's taking place right now. And I'm just wondering what you're projecting in the future, but also just building on your solutions. As we see in the automotive industry, the tier 1s, OEMs, and the technology companies, if you ever see any of the commercials, someone's driving the car and they'll say, I love this Alexa, but someone else will say, no, this is a Buick. So I think customers are confused in terms of who owns the customer. Is it the technology company or is it the automobile company? As you talk about solutions, are you anticipating that there's still going to continue to be bigger patent wars, or is there a solution for that? Is PatentBooks a solution for that? Or are you anticipating that it's just going to continue to get out of control? And where's the focus for you guys?
Well,
that's a long question.
We believe that PatentBooks is a solution here, and with Aon providing a backstop on the insurance stuff to take care of all the other outliers, the non-patent book participants, we hope that this whole issue really goes away. I hope that these, 10-figure kind of patent litigations that are occurring these days, such as the ones that have gone down in Germany, as well as the ones even here in the United States, with the intel loss, we hope that those things go away, because there'll be a more efficient way for those patent owners to receive compensation.
So what are you guys hearing from like the automotive sector? What are they saying?
Well, what I would say is we have a lot of conversations with automotive companies. To your point, there's so much innovation within that industry. I think it's been around for a long time, and all of a sudden you're having these computer chips that are controlling the cars, and you're having autonomous driving and new software solutions that are being inputted within these cars. And there's so much risk to it, right? And I think we've seen it on a public scale. You talk about the Rivian new electric truck that had a large trade secret case. You talk about the Uber Waymo, which is a $250 million trade secret litigation. I don't think these cases are going to go away, and it's definitely something that we're having conversations, I would say, on a weekly, monthly basis with these type of companies, on the OEMs, even the supplier companies that are providing some of the parts and the technology within the cars as well, because there's so much innovation. I think in the future there will continue to be litigations around that. I think there's no doubt about it. I think there's so much IP being filed around that industry as well, that I think it's kind of inevitable that we'll see several litigations and potentially large litigations within that industry. And I think the IP infringement insurance product is something that could backstop those type of litigations, especially on a catastrophic type of scale for some of these companies.
So what are they saying that when you guys have conversations with them?
Well, they're interested, right? It's a good question. I think they're aware that there's so much innovation and IP being filed that's why the conversations are happening. I think if we had these conversations 20 years ago, I don't think it would be as fruitful, because these companies have just been operating in the same capacity and manufacturing these old, equipment manufacturing type of cars, and now they're technology on wheels. So I think the conversation and risk is changing, and I think we're having great conversations around that, to where we're kind of opening their eyes to potential risks, and I think they're somewhat hesitant and a little bit nervous around some of the risks and the innovations that are happening.
Yeah, I don't think it's Peter, I don't think it's really, you can pinpoint a problem to just the OEMs or different pinpoints on the supply chain, because I think Art would agree with me that it's a problem that cuts across the entire food chain in the automobile network. And and that's where this whole contractual indemnities comes into play, because you're trying to make sure you got the right protection mechanisms. The problem is with these large OEMs that have those indemnities, that a lot of the smaller suppliers they don't have credit worthiness to withstand those indemnities, right? So they often becomes Ford's problem, because the small company just gets overwhelmed with a $20 million lawsuit. You see what I'm saying? So that's why insurance is really a great option to help address that.
Or even more importantly, be able to point them in the direction of the patent book, subscribe to the patent book,
Right.
Get the licenses, and then say, look, I've done the best I can for the reasonable price here of the patent book. And, if you really want to get paid for the use of your patent, just publish it to the patent book, and it will come out and be compensated accordingly.
Mm-hmm. And we've seen it in a real life scenario too, and I'll keep it anonymous because it's confidential with our client. But we had a company who was making a new innovation around lighting and LED lighting within cars. They had a very big contract negotiation with a large, European automotive manufacturer. The large automotive European manufacturer said, "This is a great solution. You guys are a new kind of startup with a smaller balance sheet. If we're going to use this, you guys have to, cover us for any IP issues." But the problem is they had the indemnity there, but they didn't have the balance sheet to actually sit behind that indemnity if a case were to happen. They had no cash in their balance sheet, and so we were able to have a solution. We had a $50 million policy that sat behind that single contract with that automotive manufacturer, and they were able to secure that policy. And so, that's just one little part of the whole car. And so, we're seeing a lot of situations like that, not just in the automotive manufacturing space, but in other industries as well.
That's
and the
great.
industry tends to be a follow me industry.
You're saying they just wait, it just needs to have a couple of leaders take action, and then the rest of the industry will follow?
I believe so.
Okay, good. Well, you've been in it a long time, Pete. Okay. You want to continue, Ross?
Yeah, absolutely. So two more slides I'll touch on quickly, but this slide really just highlights how I think simplified the process. As you know, today to secure a policy, 2 to 3 years ago, it would take months to get a quote. Now it's just filling out an application with general business information. We send that over to the insurance markets. They do their own due diligence, which is no cost to us or no cost to the potential insured. And then they come back with quotes essentially, and then we get an okay to bind coverage. So all in, a 5 to 6 week process, I would say, to secure coverage. So pretty streamlined to bind up coverage today. And then the last slide looks at specifically, so there's some coverage, IP coverage in other policies, right? I think there is a misconception with how much coverage there actually is in other policies. When you look at technology E&O and media liability, there's some overlap within copyright and trademark coverage. But when you actually look at the definitions of what's being covered and tied into the exclusions and things like that, 99% of the time, you're going to see a patent infringement exclusion. You will see some copyright and trademark exclusion, but there's going to be limited claims that are going to be paid out. For example, a media liability policy, it's going to cover advertising claims. So, you're going to be advertising certain things on commercials or online. Let's say you have some picture on there that you didn't license a copyright to. Could be a decent sized claim, but you're probably not going to be breaking into the 7 figures for claims. Whereas the IP insurance policy is really to be a holistic solution to cover those large catastrophic losses towards patent or copyright, around source code, around your whole software company or things like that. So it's really meant to fill the gap into where some other policies might have some coverage, but it's really meant to cover those catastrophic risks in kind of more of a holistic and broad blanket basis.
All right. Well, Ross and Brian, thank you very much for your presentation there. I think it's been very, very informative. And in fact, since we have got this recorded, one of the things that I've observed is that many people, I mean, an extraordinary number of people, click on the invitation to the patent book presentations, but then don't watch it live. And yet they come back and watch the recordings. That's why we did record this. So they come back and do it because there's still this paranoia about willful infringement and so on and so forth like that. But people are watching. And in fact, it's impressive how many people are watching the videos here. So
good. That's great.
Yeah. We thank you again for illustrating how the insurance and Aon specifically can backstop all the remaining outliers of in terms of reducing the risk of patent infringement that PatentBooks wants to address squarely, and by creating this new marketplace here for patent licensing. So again, Brian, Ross, thank you very much. Audience, thank you for participating, and we'll look forward to speaking with you again. Thank you.
Thank you, Art. Thanks for having us on.
Great evening.
Bye.